Buy low, sell high, rinse and repeat. No better time have we seen that play out than the last week here. First off, I have to say congratulations to all of you who watch this channel. We've seen the comments. Many of you have reached out. You've been able to absolutely crush it in the last week off the back of our reports. Last week, we talked you through be greedy when others are fearful. We saw the precious metals. They broke down towards 7-month lows. Massive fire sale across gold, silver, platinum, palladium, crude oil. And what have we seen? Just within the space of 1 week, we have seen commodities slingshot higher here, as you will see by gold currently breaking back above 1,870 US dollars per ounce. We have silver back above $22 per ounce. Palladium's trading back above $1,185 per ounce. You've got platinum about to break back above $900 per ounce. Copper's had over a 2% gain over this week. Oil prices, they gapped higher over 5% from the Sunday open. We've got natural gas prices. They're trading at the highest prices over this year. You've got multiple commodities, including European natural gas prices, uranium, all breaking out to multi-month highs. And what we're seeing at the moment is crisis on top of crisis, which, as traders know, that does present opportunity on top of opportunity. Now, no one can control these world events right now, but of course, you need to understand best opportunities to capitalize on the current environment that we are in at the moment. So we've of course now seen escalation in the Middle East, another crisis brewing. As you would have seen, gold immediately off the open gapped up over 200 points to the upside. We saw oil prices, they gapped up over 500 points to the upside. We've of course taken the opportunity here to start scaling out some profits. We were building into multiple positions last week across all the precious metals. As you know, we talked you through it again on Friday that gold was an absolute fire sale, with the price breaking all the way down to $1,810 per ounce. I talked you through it last week that I liked gold back at $1,825 per ounce. I liked it at $1,835 per ounce. We took the opportunity on the cascading sell-off last week to build into multiple positions. And now, of course, we are in a windfall amount of profit, as many of you are as well. We've absolutely crushed it. We have gold right now. It's breaking out above 1,870 US dollars per ounce. And again, there's just been back-to-back opportunities to capitalize. Buying on red days last week, buying when there was lots of fear and panic in the market. We can also see from the data as well that many hedge funds and money managers, they got liquidated last week on the cascading sell-offs to the downside. We had China off on their 1 week public holidays, creating thinner liquidity. And as such, many of these larger speculators and hedge funds, they got liquidated on the breakdown to 7-month lows, which is classic for these markets. They all get liquidated, and just as that happens, the market slingshots higher, like you've seen on the Sunday open, where we broke down to 7-month lows. We talked you through it, really banging the drum there. This was a massive fire sale that you did not want to miss on gold. Many of you, of course, listen to that. We can see that by the comments, and all of you that have reached out to us regarding this. I mean, really, it is times like these that can make millionaires and billionaires, when you've just got such huge opportunities being presented in the market. Again, the last week is just one of the biggest demonstrations of that. You have a situation now where a lot of traders, they're not in the metals, right? They weren't buying last week. They were afraid to do so. Now they're waiting on a pullback. And what are we seeing? Just the metals are absolutely pumping to the upside. It tends to be the function of any bull market to leave the least amount of market participants in that move when it finally does have the significant surge higher. We're, of course, fully loaded across the board with all of our positions. So we're at max amount of positions right now across all of the precious metals. On the pump that we're seeing at the moment, we're taking the opportunity to further scale out our profits. This also puts the Fed in a very precarious position here regarding future interest rate hikes with the escalation that we're seeing in the Middle East right now. This is all starting to get priced into the market. You're seeing a flood of capital move into commodities. So as you may know, during these times of Middle East conflict, commodities, they outperform. You've got safe haven inflows immediately into gold, into silver, into energies. Alongside that, we've seen European natural gas and US natural gas prices surge this week to the highest levels that we've seen all year. Alongside that, you've also got multiple agricultural commodities all breaking out to the upside. You've got oil as well, which is catching a bid too. So multiple commodities, they are all starting to break out to the upside after the massive fire sale that we saw last week, especially on the precious metals. So I do hope that those of you, you've been following our reports, that you've absolutely crushed it. From everything I'm hearing right now, all of the comments, all of the feedback, those that have reached out, you've absolutely killed it here. So the game plan at the moment is, of course, we're in all of these positions from the swing lows that we had last week. Again, the best opportunities last week were on the back of non-farm payroll when gold broke all the way down to $1,810 per ounce. You had opportunities throughout last week to be buying under 1820, under 1830, under 1840, under 1850, under 1860 and so forth. And currently we have gold breaking out back above 1870. So it's just providing a massive windfall amount of profit here. And it doesn't look like we're going to start seeing de-escalation in this crisis just yet. Bear in mind as well, going into weekends where things can really start to heat up, nobody really should be shorting the metals as you go into a weekend where you have a conflict in the Middle East. You've just seen the huge gap higher that we had off the back of the Sunday open. So if things escalate again over the weekend, you can expect the potential for further gaps higher. So therefore, it's going to be dangerous for traders to be holding big short positions in the metals and energies here going into weekends. So just be aware of that later on in the week, often you can see further acceleration to the upside as traders, they need to manage their risk if they are shorting the metals here going into weekends where we do have a conflict in the Middle East at the moment. So you could see further price surges into weekends until things do start to settle down. So again, this is the playbook at the moment, and we've seen already a huge windfall amount of profit just since last week, and we banged the drum with you regarding the massive sale and discount that we were seeing on the precious metals. Again, the bigger the pullback, the bigger the subsequent rally. Now you're seeing the rally after multiple opportunities throughout the last week to pick up precious metals at bargain prices. So again, congratulations to everyone who's absolutely crushed it. Feel free to comment just below as well if you've absolutely crushed it too with our clients at the Gold and Silver Club over the last week. And of course, this comes back down to utilizing a professional, research-driven approach in the market. It comes down to years of experience, then aligning that with the real-time data-driven cycles and capital flows in the market. This week, China are back from their public holidays. Immediately off the back of the Sunday open, not only did we have the safe haven bid as a result of the escalation in the Middle East, you've also had China back on their one-week public holiday, huge surge higher for the metals and energies right at the start of the week, exactly as we predicted with you. In fact, everything that we discussed with you last week, it is all played out. Feel free to just go back and watch all of those videos from last week. This is all played out exactly as we expected. Again, you want to be utilizing data, statistics, market intelligence. Technical trading, it's not enough. You're not going to get any sort of an edge by using technical trading. You really need to be utilizing a research-driven approach. You want to further align that with the intermarket correlations, the ratios in the market, learn and understand how the narratives, the fundamentals, the geopolitics, how that will affect the market, how you can position correctly for this. And then, of course, how the hedge funds, the money managers, the banks, the institutions, how they're positioned in the market in real time. This is going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.